Hello everyone, my name is Shashank, and before we move ahead to the video, I want to ask you a question. What comes in your head when you think of financial markets? Well, that's cool, but have you ever thought why a good economy needs a well developed financial market? Or why a financial market is important for an economy? In today's video, we are going to clarify this only. So stay tuned till the end and let's get started with our session today. First of all, we need to understand what are financial markets. Most of us, we get confused between stock market and financial market. Stock market is just a part of our entire financial market, okay? Now, let me just explain it. First, take the term market. What do you understand by this term? Market? It's a place where buyer and seller come together and they make a deal. Buyer buys a product, seller sells a product and makes a profit on it. Yes, this thing is very much clear with everyone. Now, just add the term financial to it. Okay, it's a marketplace where both buyers and sellers come and they deal in financial instruments. Instruments like bond, stock, debentures, derivatives, commodities, every single thing that has to do with finance is traded here in this market. This is what we call financial market. Okay, I hope the concept of financial market is clear to you. Now, what is stock market? Stock market is a place where stocks are traded, equity of a company or different financial instruments that comes under the stock exchange, Board of India, SEBI, they are traded under stock market only. Now, apart from that, there are different instruments sold by different places like banks and DSAs, direct selling agents. All these people, they sell or they deal in financial instruments only, and they are a part of our financial market. Here you can see a basic chart of financial market. What are the elements of our Indian financial market? Now, coming to its utility part, why it is important to us? Why do we need a financial market? Let me just give you a very simple example. Let's take Ram. Okay, Ram is a man who earns a good fat salary of around 1 lakh rupees a month. Okay, and he's able to save his 20,000 every single month. Now, after 5 months, he has 1 lakh rupees spare. Now he is willing to invest that 1 lakh from where he could generate some sort of passive income, or he could increase the value of his money. Okay, now what he will do, if we don't have stock market, if we don't have any financial market, he won't be able to invest his money. This is how a good financial market helps a common man. Now, coming to the macroeconomic part of a financial market. Okay, why it is important for an economy, for a nation to have a well established financial markets. Okay, we will connect the example of Ram and the new example that I'm taking of ABC Limited. Okay, it's a hypothetical example. ABC Limited is a steel manufacturing company. Okay, it needs 10 crores of capital for establishing a new manufacturing plant. Okay, and they don't have this much money. So what they are trying to do, they are trying to raise some funds so that they can establish a new manufacturing unit. So what they can do, they can either go to banks, which is again related to financial market. They can give the company a debt of 10 crores and they can establish a new manufacturing unit, or they can sell their equities. How will they able to sell the equities? By launching their IPO, yes, initial public offering, or by selling it to venture capitalists, to people who are ready to pay a big sum of money for some stake in company. Okay, no matter what path they choose, every single thing will come under the financial market of an economy. Now, if the financial market is transparent, if it is well developed, every investor, whether it's a retail investor like Ram who is ready to invest a small amount, or it's a big venture capitalist, everyone will be interested in the company if every single thing, every detail of the company is transparent. They know how they are performing. Okay, even the banks will give them loan only on the basis of their assets and the performances. All these things are clear only when we have a well, good, developed financial market. Now we will try to see some of the implications for the example that I gave you previously. ABC Limited. Okay, let's say this company was able to raise funds of rupees 10 crores. Now, what they will do after it? They establish their new manufacturing unit. After that, what will happen? They will employ more people. Yes, they will pay salaries to them. Now, when employees will get salary, they will spend that salary for their personal needs. Here we get two verticals. Understand this thing very carefully. First one is the expenditure done by the employees. That money is getting directly poured into the market. Second one is the savings. They will try to save some of the money from the salaries, and that savings will go as investment after some time, and that will again come in the market. And this is how this entire cycle moves, which ultimately leads to growth in the GDP of the nation, and ultimately a country, an economy becomes richer and wealthier if the entire system, entire financial market performs well. So, this is how our financial market helps our economy to grow. Now, we will try to figure out how it all happened. Hmm? Because in India, it was not that easy. Before 1991, we were under a license Raj. Everything was so much regulated that it was difficult for a company to raise funds, and it was really very difficult for a retail investor to invest some money in a big company. What happened? What interesting thing happened in 1991? Nothing but new economic policy introduced by our then finance minister Dr. Manmohan Singh. He opened up the Indian market for the foreign players so that they can come in the country, invest, establish their plants, their manufacturing units here, so that they can give competition in the market. Okay, competitive selling can take place, and the demand and supply mechanism works in a proper way so that our country's economy grows. Okay, by that time, by the time of 1990s, we were under a huge debt. Our gold reserves were gone. We were facing a lot of trouble on the global level in the financial world. So this was really a very wise decision taken by our finance minister then. And what happened ultimately? When we opened up our market, the companies, they had to become more transparent so that they can lure the investor from all around the world, and that transparency led to a well developed financial market, which is laying the bricks for the future of our country. I hope this video was helpful for you. If yes, then please hit the like button, subscribe to the channel, and share the video. Hope to see you in the next video. Bye then. Enjoy yourself, take care, and have a very good day.